unlike other sectors, I think the airline sector, even with this massive move this week, the stocks are down 37%. And so it is a kind of a recognition that maybe bankruptcies are off the table and also that things are recovering faster. What we find unusual, though, here is there seems to be a very simplistic trade that's happening here, where you're just buying the kind of the stocks that are off the most versus trying to think through the fact that the balance sheets are very different today than they were at the end of 19. And if you look at enterprise values, the picture is very different. And on an enterprise value basis, like American share enterprise value is flat year over year, unlike the stock, which is down 35% still year to date. And that is in sharp contrast to like a Southwest, where the stock and enterprise value is about down 27%. So there are some shares like American that seems to be trading like we're having a V-shaped recovery, while there are other stocks in the group that are kind of still showing a little bit of a lag here. So it's an interesting move, and some excitement here that the recovery is coming faster.
But is what you're saying, Savi, that it doesn't match up with the fundamentals and that it's just getting swept up in the reopening and the fiscal and monetary stimulus wave that's washing over this market?
Exactly. There doesn't seem to be a lot of thought behind, where the bets are being placed. Again, if you've seen the data points, at least from the airlines that we've seen so far, is that leisure is where the demand's coming back. It's the domestic market where the demand's coming back. But if you look at the stocks, it's really just any stock that has sold off the most. And I take American as an example because it's recovered a lot. It doesn't have as much exposure to the domestic market as Southwest, and Southwest is still kind of further behind on an enterprise value than American. So it's, we think there's an opportunity here to high-grade portfolios, and we would be rotating out of, those stocks like American that have, recovered fairly well into kind of more domestic leisure stocks like Southwest that haven't seen that recovery as much.
Where do you stand in terms of the long-term impact of things like work from home on business class travel, international travel, those subsectors of the industry that are so profitable for the major airlines?
Yeah, I think, initially the demand impact will be driven by people's comfort of flying in a world of kind of COVID-19. As we get therapeutics and vaccines, I think that kind of fear goes away. The other more important aspect will be just the health of the economy, and that will drive business demand. Over the longer term, if you have work from home, nobody was flying to the office, so I don't think that really impacts demand for travel. And I think what has been shown is, as much as Zoom or Microsoft Teams and things like that have been helpful, there's just not a good replacement for in-person meetings. So I think the trends that we had going into this crisis will return once we can, once the economy recovers and once we get comfortable flying in a kind of a post-COVID world.